Hello, my name is Keith Thompson, and I'm with the Avison Young Hospitality Group. This is a video that's being shot for the 2024 year. We'd like to share some things on how we see the market in the past, present, and how we see it going through 24 into 2025. It shouldn't take long, 8 minutes to 9 minutes. We'd like to share some of our thoughts with you. Okay, the current hotel real estate market, it is very, very choppy. Transactions across the board. Now, we've got 120 offices all over the world. We do obviously hotels, but we also do office and retail, industrial, and everything else. And transaction volume is virtually down about half, as it is with everyone else. The center issue is debt. That is our issue here today. Right now, today, you go get a call it a whole loan, bank loan that you've dealt with. It's a bank that you know. You might get something in the 8.5 CMBS if it underwrites at nothing more than a 65 LTV. You've got a 12 yield, 13 yield. If you can hit all the metrics, you can get debt in the 7.5 to the call it in the 7.6 range on a 5-year term. If there's a story to it at all, meaning it's got to change brands, it's going to need a PIP, it hadn't been operated correct. If there's any story to it, it's SOFR plus 500, so you're almost in the 11 range. So debt is an issue, and it's going to be an issue throughout the whole 2024 year, in my personal opinion, probably well into 2025. Labor, taxes, insurance, every one of these factors are outpacing what we're seeing in growth in ADR and in RevPAR, and the labor is astronomical, the taxes and insurance. So everything is increasing, so that the elevation we're getting in the end, the ADR is really kind of not getting to the bottom line. We think 2024 is going to be a very limited transaction year, pretty much like 2023 was. We think 24 is going to be pretty much like 23 was. There may be some hope for interest rates to somewhat begin to come down by the end of 2024. These are the concerns that we have as we're shooting this video in the second quarter 2024. Obviously, unrest all over the world. You got Russia, Iran, Israel, Ukraine. That situation over there could turn very badly extremely quickly. You have the unrest within the United States that I won't talk a lot about, but it's in the news like every single day. Inflation. I got to tell you, when all this started in late 22, everybody talked about being it was going to be transitory inflation, meaning it wasn't going to last long. It was just going to kind of be here today and gone here tomorrow. Well, that's not been the case. It has exacerbated everything, and I mean cost of labor, food. I don't know the restaurant you go to, but I mean it's double the amount it was in early 2023. I went to a restaurant, a considered a steakhouse restaurant. I won't name the name, but we ordered a chicken thing that comes on rice, a side, and a salad, and with the tip, it was $65 for two. For me and my wife, and a year and a half ago, it would have been half that much. So it's really, but anyway, cost of labor, food, staples, household essentials, restaurants, of course, have gone up. Repairs, service, dry clean. I mean, everything is really exacerbated. The problem with inflation is once a group, let's say it is a restaurant or a dry cleaner, once they get used to those inflated prices, they really kind of don't ever come back down. The only thing that can affect inflation is competition. That's the only thing that's going to drive inflation down. Some other top concerns. The elections are coming up. Federal Reserve outlook. I got to tell you, it's been a little bit odd because all the interest rate jumps have really, it's lessened the inflation rate, but inflation is still is still growing at a quite healthy pace. Lenders, their patience has evaporated. It's gone. You got to do the PIPs if you want a hotel loan. it's this interest rate, et cetera. I believe in the economy. We're in a very fragile state right now, and it could go really either way. It could, just kind of smooth out and be okay, or it could really be an issue going forward, and that's where we're at, right now. How we see it. Hotel transactions, some are going to get done, and we've gotten some done. We haven't done great in the first quarter, but we've probably closed a hotel deal every 9 days or something like that. But the ones that are getting done are the ones that have actual NOI trailing 12. You can get debt. It is the assets that are newer. That seems to be the deals we're trading now. We think the debt costs are going to be elevated pretty much throughout 2024, well into 2025. The metrics that you use, price, PIP, debt, equity, just the whole stack has really changed, because when you go from an interest rate in the high threes to the mid fours, and you're in the high eights to the high nines now, I mean, it has doubled, and so the metrics that you invest on has really changed. Cash flow is king. And those are the deals that are getting underwritten, and you're able to go get debt on now. We believe there's going to be a sharp increase in lender-owned, hotels. It's debt that's coming to term. It's ownership that cannot afford to invest any new equity into do PIPs. And so we think that there's going to be a really sharp increase in lender-owned hotels. Who we are, we sell hotels and we procure hotel debt. We have 100 offices around the world. We have 55 in the United States. We can put boots on the ground in the United States, not over the world, but in the United States, we can put boots on the ground in about 2 hours on any dot on the U.S. map. It's pretty unusual to be able to have that stretch and to be able to be almost anywhere in the United States. The last 10 years, we've closed 618 hotel transactions since 2013. Our BOVs, opinions and values, we do hundreds. And they're always free. There's never any expense. Look at us as a resource. So even if you're buying something from someone else and you want to get a free third party arm's length opinion, we'll be happy to provide an opinion of value. If you have an asset or assets that you believe could be a problem, or you're thinking about, call us. We're happy to get an opinion value, and our opinion values are actually quite good. It has comp sales, it has market data. It tells you precisely what the OC and ADR and RevPAR are in that marketplace. It's probably call it in the 30-page book, and it's completely free. So even if you're looking at existing stuff that you own or stuff that you're thinking about buying, we'll be happy to help you with that. And again, we do hundreds of them, so please take advantage of that. But that's it. That's who we are, and we would love to help you anywhere we can at 2024. This video is again being shot in the second quarter of 2024. My name is Keith Thompson. I'm one of the principals at the Avison Young Hospitality Group. But call us if we can help, and we hope you and your family. We hope that you have a great 2024 year and a safe 2024 year, and let us know if we can help you. Thank you.